Welcome back to BLOCKTV, where it's time for Blockheads. Every day, we round up the top headlines from around the cryptosphere, and to run us through today's top stories, joined by none other than our very own Whitney Deal. Whitney, take it away.
Thanks, Yael. CNBC and the rest of the sphere leads with the SEC suing the messaging app Kik for its $100 million cryptocurrency offering. Cointelegraph reports U.S. Federal Bureau of Investigation calls for QuadrigaCX users to provide information. InvestinBlockchain.com informs Binance to release its own stablecoin backed by the British pound. Cryptoslate brings us the latest on Samsung's bet on Bitcoin mining. And CryptoBriefing.com spins us the cautionary tale of robots can now trade crypto better.
Brilliant, Whitney. Let's start with the news that is dominating the sphere today. CNBC and the rest of them reporting on the SEC, right?
Yep, they're never far from our news desk. As yesterday, June 4th, according to the outlet, the Securities and Exchange Commission sued Kik Interactive Incorporated for conducting an illegal $100 million securities offering of digital tokens called KIN. The SEC claims that Kik sold the tokens to U.S. investors without registering their offer and sale as required by U.S. securities laws.
Which is fascinating given the fact that this battle has just gone up a notch. Yes, continue.
According to the complaint, Kik had lost money for years on its online messaging application, prompting them to seek new avenues of business, which were financed through the sale of 1 trillion KIN tokens, raising more than $55 million. The tokens were apparently marketed as an investment opportunity that would go towards creating a KIN transaction service on the platform, building a system to reward other companies to adopt KIN. However, at the time the tokens were offered and sold, the SEC states that these services and systems did not exist and there was nothing to purchase using the tokens. The complaint charges Kik with violating the registration requirements of Section 5 of the Securities Act of 1933, seeking a permanent injunction, disgorgement plus interest, and a penalty. They're not playing around.
I'm trying to think if they're trying to set an example with Kik, but also it's to remind viewers, Kik is also behind that Save Crypto campaign, so to speak, that they went themselves head-to-head with the SEC last week, asking the sphere to put in money into a crowd funding source, so to speak, to help fund their legal battles, which now the SEC has taken on. Great, Whitney, though, not just the SEC, apparently also the FBI is in the sphere.
Continuing with news from the U.S. government, the FBI has called for former users of the QuadrigaCX cryptocurrency exchange who lost funds due to the insolvency of the exchange to fill in a questionnaire which asks for various details concerning their experience with the company and personal information. This follows audit reports from Ernst & Young outlining assets and debts of the exchange and its subsidiaries in April, as well as fraud indictments in connection with the exchange. The questionnaire asks former users for their usernames and whether they have access to the addresses of the exchange's hot wallets and old transaction IDs. It further asks whether respondents provided document scans and identifying information to the exchange, and what funds they held in their account, noting that respondents to the survey may be asked for additional information that could be useful in the investigation.
Well, I think somehow it's not surprising that the FBI has now entered the sphere of QuadrigaCX conundrum. Yes, okay, moving along. Binance.
Big news. The exchange is set to release a new stablecoin backed by the British pound under the ticker BGBP. Very few details about it are known, but CZ has responded saying that it is in the testing phase and that only 200 pounds thus far have been minted. There is no indication as to when it might be officially launched, but the news has for sure gotten pulses racing in the cryptosphere. The introduction of a stablecoin backed by the pound would mark another big move forward for Binance, which has already released a series of improvements since the start of 2019. So amidst the recent hack and CZ's war with Craig Wright, there seems to be some excitement and fun coming out of Binance.
Moving along, though, with Samsung.
They're designing and manufacturing chips for Bitcoin mining, according to a revelation by the general manager for Samsung Foundries in China, that the company had been designing and manufacturing chips for Bitcoin mining since the first quarter of 2018. They've produced the chips in the latest line of microBT devices. This news and the company's involvement in the sphere comes as no surprise, as in February they announced that its new Galaxy S10 would include support for storing cryptocurrency private keys, and that it's developing its own blockchain based on Ethereum, which will likely result in the Samsung coin in 2020.
Because everybody's going to have their own coin by 2020. Last but not least, apparently robots now can not just define or decide the elections for you, but also trade? Yes.
So I guess this is the one area where Trump can't accuse foreigners of taking jobs from Americans. Robots can now mine Bitcoin better than you, and better than that Chinese granny that got locked up recently. Paxora, a crypto exchange and capital management company, has revealed a new trading algorithm which hustles Bitcoin better than the savviest of human traders. Their trading algorithms have generated returns of 120% over the past 21 months, and their new training models can even beat traditional markets. The Sharpe ratio, which measures returns of an investment in relation to its risks, exceeded 2.0 for the new Paxora AI algorithm. Paxora's CEO stated that these results show the level of sophistication AI can achieve in crypto hedging strategies. Though the models learn and adapt over time to keep in step with changes in the market, the goal to capitalize on price movements remains fixed. They hope to leverage the new algorithm for their active treasury management service.
I'm still at the, they can trade better than humans. I just don't want Joe Sass to hear this. Wow, Whitney, thank you. A rundown of, as we said, the day that is defined by the news coming out of the SEC themselves suing Kick. This was it for us on Blockheads. Of course, don't forget to check us out, BLOCKTV, on every social platform you have, Facebook, Twitter, Telegram, and we'll be right back.